Hello and good morning, good evening. I mean, it's good evening for us. It's howling and hooking it down with rain on this side of the world. And I know I'm pretty confident that you guys have got sun shining and blue sky and just heading into the glorious Australian or New Zealand summer. So I'm very jealous. We're just going to give a couple more minutes for people to join. But whilst we're waiting for everybody to come on board, I mean, Hannah, you can hear me, but if everyone can just quickly whack into the chat box that you can hear us loud and clear, that would be brilliant. Just because otherwise we'll spend the next half an hour talking to each other, which, you know, often happens. There we go. Brilliant. Good. Everyone's found the chat box as well, which is great. We are going to try and keep the time quite tight on this one. Obviously, we are back in lockdown on this side of the world. So we are back at home. So, of course, we have all the usual challenges, although generally there's no postman or children or buses or anything at this time of night. Things always go wrong when you're live and working from home. So if anything does happen, please bear with us. We'll do our very best to crack on with it. Without further ado, I suggest that as time is so tight, we leap straight into it. What we want to start with first and foremost is a quick show of hands. So a couple of questions on the screen here. If you could just use the chat box that you did just use to tell me you could hear us. You can either send it publicly or you can send it straight to us as panelists. But if you can answer these two questions. So the first one, what percentage of your existing client base are non-advisory, i.e. your compliance clients? That's where all the answers come streaming in. Good. People, most of you are sending them straight to us, which is brilliant. Thank you. It's fine. I won't share. I won't tell you what percentage belongs to who. I promise we'll keep it anonymous. And for those of you that have also answered, the other question we've got is, of those non-advisory clients, what percentage of those do you think have a forecast that they refer to regularly?
Good. We're going to refer to this. Just hold that thought, aren't we? Okay.
Yes. Good. Keep them coming. If you haven't got around to doing it yet, keep them coming, because I will come back to it. But look, this is why I joined the webinar today. These bold statements are obviously what we put out there, and we're going to tackle each one of them individually over the next 30 minutes, and hopefully convince you too that Predict really is the world's best instant forecasting software.
We are. We're just putting it out there, Helen, aren't we? We just thought we'll go bold. We'll say it's the world's best, and then you know, pique your attention and see what you think. Okay, so I guess the first step for all of this is that you trust Predict. You trust this information, and that it is really different from anything else in the marketplace.
Yeah, and I think to understand that, actually, to be fair, to understand where something is different, I guess you have to look at what it's comparing to, and I guess this slide does some of that. But just to kind of expand on it further, if you look at Float or Xero's cash flow tool, or even our own Futurely Advisor product, or Spotlight Forecasting, or even Fathom, and I know that they're yet to release their forecasting tool, but that tool, they're all great. They remove that need to update the actual data by connecting cloud accounting packages. But they do all fall down at least one significant way. If you take Float and Xero's cash flow to start with, they both generate predicted gross cash flow from the due dates of invoices and bills. Now, this can give some real reassurance around short-term planning, but they do not consider every type of transaction found within that cloud accounting package. So journals, spend and receive, cash transactions, etc. Not including these transactions when you're creating predictions, unfortunately, does give a wholly inaccurate picture of the future finances.
Yeah, I mean, I would add to that, Helen. I also think that they're fundamentally flawed due to the restriction of this cash flow only view, because I don't know about you, my darling accountant on this call, but I've never run a business through monitoring gross cash flow alone. That lack of double entry accounting generating predicted net sales and expenditure trends, as well as impacts of liabilities, is basic, essential information that any business owner needs to make the best decisions, irrespective of the size of their business, what vertical they play in, or what their turnover is. So, I mean, Float and Xero's cash flow, for instance, are missing 2/3 of that essential information. Operational decisions, which we have to make on a daily basis, don't we? Cash flow and funding discussions shouldn't occur with incomplete and therefore inaccurate data as its basis. Seeking funding in particular, we're really passionate about this by referencing projected data from a cash flow only software solution is putting that small business and advisor at risk of irresponsible borrowing. So, that's kind of the first step. That's one forecasting method. Help me, Helen. I can't get it out.
Methodology. Fine.
Methodology. Thank you.
Well, look, I mean, if we take the indirect forecasting tools, and look, we chuck our own into this mix, this is about being really transparent. But if we look at Future Advisor and Spotlight forecasting, they are great for long-term strategic planning. They automate that three-way forecast calculations. And prevent any risk that you potentially found doing it in spreadsheets before that. Advisor even's got accrual GST calculations. These solutions have been the cornerstone of lending decisions and of your advisory offering due to that three-way forecasting for years, particularly by the lenders. These forecasting softwares, however, ignore the due dates of the invoices and the bills that are sitting within the cloud bookkeeping software. And they really do only give that month-end view of the small business data. So then for the cohort of small businesses that need to manage their cash on quite a tightly controlled basis, that granularity is just not there when you're using any of these solutions. So of course, and I think particularly actually, if you look at the recent economic fluctuations, that short-term cash monitoring has become ever more so essential for all of our small business clients. So I guess,
well, this is our first, claim that predicts the world's best instant forecasting software for accuracy over the short term and beyond, because I'm going to go into some details now about its hybrid approach and why it, as a complete future financial view, is absolutely critical. Sensitive algorithms, understanding, uniqueness of the industry, accounting transactions, so that operational cash flow, hiring, funding, and lifestyle decisions can really be made with significant increase in confidence. So, without further ado, Hal, if you can flick to the next one.
Yeah,
next slide.
I have. And just
you.
look, before you do jump in, and I'm going to get you to jump into detail, I just want to say that the trust thing is a huge element, and it's a huge element that we really acknowledge with you guys, that with any forecast or prediction that you want to present to a client, you have to be able to trust it. Why Excel has remained the forecasting tool of choice, in spite of its time-consuming nature and the fact it's relatively static and all the things that we already know, is because you know what the drivers are. You know how that forecast has been created because you've done it. Each number can be explained by you to your clients, and this understanding of how and what is being forecasted is vital for any conversations you're having, because any challenges you get back from clients, you have to be able to respond to. And of course, any recommendations you're making, you have to feel confident in those that you are delivering. And so I guess this is where, from a deep dive perspective, Han, you're gonna, should I stop sharing? And do you want to take over the screen?
Sharing. Yeah,
okay,
absolutely. Hold. I'm going to share my screen. We're doing this dual-handed. Here we go.
I've just realised it's so late at night. I've got no lipstick on. Can I just say? Really important factor in the middle of this webinar. That's really disappointing.
Right, just checking. So what I've done is I've got predict up on some of the screen, and I've got a little just run through, and there's a lot of words here, but I do think, you're the accountants, you absolutely have to trust how we're generating predictions and what this hybrid approach is doing. So do you know what? We're laying it bare. So what information do we pull in from Xero and QuickBooks? Reports, we're pulling in the P&L and balance sheet. Because we're doing that, it means that we can get information much more quickly, and we're storing that every time we pull it in, and we're pulling in up to 2 years if we can get it, 1 year if we can't. It also means that any adjustments to equity, currency gains and losses are absolutely bang on and fine. So those FX calculations are absolutely spot on. We're also pulling in the invoices endpoint, so invoices and bills. Any changes to their status, the part paid or unpaid piece, we'll know each time that we sync. And this information becomes an integral part of that short-term cash flow forecasting. So if we go into Predict and have a look at it, we've actually got a full invoices section here. So I'm just going to focus on this bit first. It's, it's really simple, really self-explanatory. Every time a new client of yours is onboarded into it, there's full interactive walkthrough. So, everything's explained. The why behind, why they need to do something is really explained. But, as one would expect, being able to change the payment dates of an invoice or bill, or being able to exclude it completely from cash flow is instantaneous. It's, absolutely simple to use, because it needs to be, because the user experience is really, really paramount. We're also bringing in journals. we all know that journals are used a lot by our darling accountants, particularly with things like payroll, for instance. So we're really making sure that we bring in those so that on a granular level, our predictions are spot on. And bank transactions, keeping an eye on what's going in and out of the bank. So for GST payments, that what we don't want to do is double count anything, and we want to make sure that this information in the future we can then communicate unreconciled bank transactions. The work for that's nearly done, and it will be coming very shortly. So then what feeds into the cash flow calculations? Now on this home screen, what you're looking at, if you haven't seen it before, predicted cash, historicals in the past, predicted data into the future. It goes up to 3 years. I'm just going to minimize your face, Helen, because that's all I can see at the moment. So it goes up to 3 years for the prediction side of things. Here's the engine room, your sales, cost of sales and expenses. This is where your small business clients, your non-advisory clients, because this is about non-advisory clients, just to make that really, really clear again. This is where the engine room of their businesses. So for instance, if I open this up, I can see my sales and I can see all of our futurely predict rows. Now, how has this been made? Well, I'm actually going to jump down here. We'll jump to the cash impact first because that's the order that it's been written in. So what's feeding into the cash flow calculations? So we've got all of the balances up until yesterday from the balance sheet. So that's where the reports come from. We've got all of the information from debtors and creditors. So we're, unpaid invoices. We're including those cash flows you can see here on the cash view. So every single account has got two views, the P&L view effectively, and then when that activity will be paid. So you can see the unpaid invoices from the section that we looked at beforehand are here as a line 2, just to make it super clear. The automated predictions also, of course, have the cash impact. So what we do for every single invoice and bill, we look at the customer or the supplier that it relates to, and we aggregate their average payment days. So for every single account, for every single transaction that's been in it, the payment days have been aggregated, whether it's a customer, supplier, whether it's a journal or spend receive money transaction, which of course would be on a day zero perspective. All of that is looked at every single time we sync the data. And so that this live, payment trends are created for your clients automatically. It's not something that you guys, would even want to consider doing at that level in a spreadsheet, for instance. So that's why it's this instant, impactful, and will also be something that can alert, you or a business when things are happening that, if extrapolated, that might be hidden in the, in the zero data or their accounting data. And then, of course, there's manual predictions. Any account that you have, we've got 3 different prediction methods. Freestyle, just entering data straight into the box. The repeating method, which if you've been using Advisor, it's very similar to that. And in Predict, we've also got units as a prediction method, which will mean that you can sell products or services. So entering the selling price, how many, what, so I need to put things in. I was going to go red because it's expecting me to put in data. Monthly, weekly, or quarterly sales, start dates, end dates. You can put growth and refunds in and add as many price changes as you need to. GST will be applied by default, but you can override that. For instance, if it's got 0 GST, and then for every single transaction, the cash impact is also something because of the 2 sides of the coin to every transaction. So that's the manual side of things. So of course, all of that's automated too. Then the actual prediction of the numbers, this consideration of the cash invoices and journals, every single one of those for every single account is separated out. The trends for each of those things we look at, whether the numbers are steady, is there growth? Are we looking at different patterns? Is there seasonality to look for it? To look at it, we're even looking for COVID effects, because of course, well, we're all praying that we don't want that to happen again next summer with lockdowns and so on and so forth. It'll also do things like, and this is really to build trust with you guys, is it considers accounting discrepancies. So if things aren't up to date, or if they've been posted in a different period, for instance, 2 months worth of rent getting posted into a single month, it looks out for these. Tomorrow, in fact, there's an update to the predictions happening to make sure that on the wages side and wages side of things with payroll journals, that if it hasn't been posted at month end, that we're still continuing the predictions going forward. So all the time with feedback, it's getting more and more and more robust. It's already really robust, but it's getting better. And we had one, payroll journals over 2 weeks, so that's been added since it's been released. There will also be, current period adjustments. We're going to look at that, and then when we're not confident in predicting something because it looks really, really irregular, we're not going to just put, our finger in the air. We'll actually say, and when we're with everything that we're predicting, it's really important that that it's not just a black box that it's coming from. Oh, here we go. So great. So this is where my internet connection's failing. It's perfect demo time. It was absolutely brilliant earlier. Here we go. I'm just going to give it a quick refresh, because as usual, Helen, you can fill
Ad-lib.
this going through. Yeah, sorry. Standard
demo behavior.
There we go. So hooray. So for instance, on the activity side of this, we aren't seeing particularly strong trends in the account. So it's taken last year's value as a base, predicting that amount, which is what we saw in November, less a conservative 5% reduction, because we saw quite a high reduction in this account over the 12 months. We've detected journals, but ignored them because there's been a lack of regularity. So then you're advised, or your small business client is advised, that if they're, if it's causing the numbers to look incorrect, you can, of course, toggle them off and create your own. On the cash flow side of things, it also appears. So, you have a very, very clear explanation of where the money's coming from, when it's come from December in this case, and in November, and $363 are predicted from same-day cash transactions, because every single one of those transactions have been treated differently. I am going to stop sharing now and let Helen go back to the slides, but hopefully you can see, and sorry, one thing I will do before I do that is just take you over to the financial side of things. Sorry, it's very, very important, and I forgot to do it. GST is calculated accurately from actual data and predicted data. So actuals up until yesterday, predicted data from today onwards. It calculates it just like the accounting package would. You need accounting package grade calculations. That's what you have. We also have cash-based and accrual-based GST schemes. So all of that's automated. It really is this next generation, this next level of forecasting. And on that note, I'm stopping sharing and going back.
Perfect. I'll take back over. Right, hold on. Thanks, Han. Okay, back into these. And I think at a very basic level, I'm pretty confident, and please do chat box me if you disagree, but every small business owner needs to know how much they're selling, how much they're spending, and what's the impact on their bank accounts. I'm also pretty confident. Oh my gosh, the rain here, by the way, if you can hear the hammering, I'm sitting below a skylight and it's absolutely hoofing it down. I'm pretty confident that you're going to agree that most businesses, we could say they can't run their business just looking at historical data. And I know this because if any of my friends, and I'm sure any of your friends asked you, said they were going to start a business today, the first thing you'd get them to do is to make a plan. And it's because every small business should have a forecast. It's a fact. We all know it. We know you know it. But the very nature of the complexity of creating it, or that the software to this point has only given one projected view of the business, has just meant that they don't have a forecast. And actually it was really apparent. If I just take you back, I was doing some very quick sums, whereas Hannah was doing that presentation of the deep dive into actually how predict was the predictions to the questions that we asked you at the beginning. So the first question was, I'm just going to get my phone. I mean, not that they're not very complicated analysis. I'll happily share them all in more detail afterwards. But the question number one, what percentage of your client base are non-advisory, i.e. compliance clients? So the rough score, the majority of you, in fact, I would say almost all of you, came in between 75 and 90% of your portfolios are compliance clients. And then if we break that down further to look at 100% actually, Hel. We did have one at 100%. Okay, yeah. Well spotted. There were loads. I will happily divvy these out and do a proper score if you want it afterwards. Of those clients, what percentage have a forecast that they refer to regularly? Jim, most of you said 0. I think there was somebody that came in at 50%. Great job. I mean, you've got great clients, but the majority of you are sitting at 0. And it's for all the reasons that we have explained. But of course, with Predict, Han, I mean, well, you can now prescribe, complete and instant forecasting. Hopefully a little demo, even with the
there's the glitch with my connection, that you know, it really is this robust, instant, doesn't take you any time, forecasting software that's really going to identify business critical trends with no effort on your part. So look, it's nothing new. You know the value of forecasting for every business, but until now, it's just not been possible. So that's it. This is not about beating anybody with a stick. It's about, you know, absolutely respecting the fact that creating these forecasts are time consuming typically, and you know, there's not been a market to pay for it because it's so time consuming.
Exactly.
But now, for the first time ever, you can now provide every one of your clients with an accurate full business forecast for their business. Business forecast for their business. I mean, what else would it be before? So that is why we think that Predict is the world's best instant forecasting software for every small business.
Every small business.
Everyone. It's my dream.
Next one, winning new business.
Yeah.
Look, starting with your existing portfolio, we've already established, I'm just looking at those stats, that the non-advisory clients are the bulk of the portfolios. They are also likely to be the most disengaged clients. I say that warily. I don't say that in the, oh, they don't like you. That's not meant to be that kind of response. It's just they're the most disengaged. The relationship's based on compliance rather than business advice. You just speak to them for those compliance issues or compliance conversations. And actually, the challenge for you guys is that this sector doesn't value advisory because they perceive it as being overkill for their needs or their budget. And actually, a lot of them don't even know that you will offer it because it just won't be on their radar. But we also acknowledge that you've got to make profit from any new service that you are offering. So we've got a little pun up our sleeve that using a 15-minute Zoom and Predict approach, these untapped clients actually pose a significant opportunity for your firm to grow into a low effort, high impact, actually recurring revenue stream.
So look, what do these small business clients fear the most? These non-advisory clients, your compliance clients fear the most? Losing their job or home or livelihood. That's at one extreme, isn't it? But that's, you know, anyone who runs a business and has the guts to do it, those are the things, you know, it's the impact on your family. And do you know what? They'll quite happily pay $150 or more on Sky or, you know, their cable, but they're not paying the same to ensure their business survives and grows. Until now. You know, our initial research has indicated that for around $150 per month, including the software, including Predict, compliance businesses are willing to pay for like a new, you can call it what you want. So whether it's your client protection service or COVID proofing service or growth check-in service, you know your clients, find a name that suits your practice that will help your clients understand that this service is different. It's a monthly service. It lets them know that they're okay. That's the point of it. It's time boxed. Has to be 15 minutes or otherwise, you know, the revenue that you will make for it won't occur. So it's time boxed, it's scalable for you, and it should increase your hourly rate by about 75%. So on that, in the chat box as well, can you possibly please share, and again privately, so it's just us that will see it, your average hourly rate when you look at bookkeeping all the way through to advisory services? What do you reckon your average hourly rate is for your firm? So anyway, the 15-minute check-in, now none of this is rocket science, but it's just looking with a business lens, on your business lens, how Predict can really be leveraged. Because where else are you going to put it? It's not here to replace advisory. It's here to really shore up and engage with and generate revenue from this untapped client sector. So what we look at as a guide: threats to the business, opportunities within the business, and short to medium cash flow needs, because you have the expertise. And, you know, sometimes they just want to know they're okay. You know, it's really, really simple. So even if you give away the 2 15-minute sessions away for free, what we've been calculating is that you're still going to make a significant amount more profit than, you know, a typical average hourly rates. But let's see if I'm proven right with the notes that come through. So that's existing client base. But how are you going to win new business? Put yourself in a small business's shoes. So, you know, they want to know if they can afford to pay for staff, stock, tax, themselves. You know, when can they have a pay rise? They want to know they're going to be okay over the coming months. We've established all this, and they want to know they've got a sustainable, viable business to support their family. They aren't the finance experts. You are. So leveling up finance know-how, building confidence in how they interpret their current and future finance trends in layman's terms, not accounting speak, if presented as a really low effort, but high impact regular service is absolutely going to differentiate your website, email comms, and social media strategy. Simple service, it can be trained across the firm. It can upskill your team into greater fee earning potential. And because none of this has been able before, because this game-changing software hasn't existed before, this is why we think that Predict's the world's best instant forecasting software for winning new business. There we go.
Hey.
What's the next one?
Okay, dokes, funding. Look, the average small business looks for funding 3 days before they need it. And I think that stat always just fills me with fear. And we feel very, very strongly that the accountant needs to play a core role in funding decisions for all of their clients. There's certainly been a bit of an uplift on this side of the world of cash flow tools that are then putting funding within it, where we feel that's really could lead to quite irresponsible lending or borrowing, whichever way you want to look at it. Now, from our perspective, now that you're non-advisory clients, we're going to have regular check-ins with you, and they've got their numbers leveled up. The cash flow issues can be spotted well in ahead of time. And we all know that just because the small business can get credit doesn't mean it is the best option for them. There are cost savings, credit control, pricing, service diversification, moving sales to online model, all sorts of things that we've particularly seen in the recent months that might be the better and more tactical options to explore. However,
just one thing on Helen, one thing on
yeah.
And you guys are business people too, right?
Yeah.
You're advisors. These are opportunities for one-off, again, time-boxed projects, right? I mean, I'm not teaching my granny how to suck eggs, but it's absolutely not to be done within the 15-minute check-in, but it is. Once this trust is established with this disengaged client base that, I didn't know you offered things like this. I thought you just did my tax or my BAS, it's really challenging that mindset. As soon as they start to trust you, it's like, listen, we can do a pricing review, but it's going to take 3 hours and it's going to cost this amount of money, but this I think is what the uplift is going to be. You agree that ahead of time. Then you're not having that awkward, I'm trying to sell you something conversation.
Yeah,
because
agree.
The data's dictated it. Sorry to interrupt, Hal. It's just
no, I completely agree. And I think we feel particularly passionate about this particular slide. I think there's some real opportunities from a revenue, but also client protection perspective. We don't want them out there 3 days before Googling, help, give me cash. They're going to affect their credit. It certainly happened on this side of the world when the government released all their government loans. Small businesses went off and applied left, right, and centre for all sorts of loans, and really, really hurt their credit rating. But led by you, if their business is modelled in Predict and there is a need for cash injection, they can apply for the right amount with affordability considerations and have an investor-ready 3-way cash flow forecast, which of course will be accepted by all of the lenders. Predict really does give you and them it gives you the tools to preempt this need in advance, but it gives the SME the opportunity to make the right decision every time, and it protects them hugely from this real danger of Google happy clicking lending, which is going on at the moment. But it also will generate revenue for you, to Hannah's earlier point around the projects. And to coin Hannah's phrase,
but also, and quite a lot of the lenders will, you can earn commission from them as well.
Yes, indeed, you can.
So if they do have
there's a platform that we work really, really closely with, who actually just launched out in Australia, Swoop Funding, who I will happily share the link with you all afterwards, that do work really responsibly. They're not just about lending. They actually, and from your perspective, they actually take a lot of things off your desk. They will, their account management is superb. They'll manage the client. They'll look at grants, local grants. They'll look at cost savings and efficiencies as well as lending, and also they will potentially give a kickback if that's the way you want to go. So we're happy to introduce any of you to them after this. But this is why Predict is the world's best instant forecasting software for identifying funding needs in time, and responsibly. I do really want to hang on that last word.
Okay, final slide.
Han.
I know, we're running out of time. I'm going to have to speak quickly. So this is probably going to be a bit controversial, but as finance professionals, looking at revenue centres and understanding the probability of attrition in your own business is not something that the accounting profession has had to undertake recently. And of course, you guys haven't hit recession for a really long time. But the Reserve Bank of Australia is warning more small businesses are going to fail next year following the damage, particularly to the Victorian economy from the coronavirus restrictions. None of this is a surprise. Their meeting minutes released on Tuesday said that Australia's economy was doing better than other countries, but warned that unemployment and underemployment would remain high for an extended period. And we're gonna, you guys are gonna face a slow and uneven recovery. We're all hitting recession. I think that, it's not looking great out there. So we've established how many of your clients are, non-advisory clients who are compliance clients. Do you know right now how many of them are at risk? So hopefully all of you want to put all of your non-advisory clients on Predict anyway, because of the first 4 slides that we've gone through. However, if we still have to convince you, have you factored in losing 15% of compliance fees? We do have a calculator which we'll share with you in an email that you can just, it's a quick ready reckoner. In the UK, they're forecasting between 20 and 30% of small businesses might not survive the second lockdown that we're in. So, it's really, really harsh over here. And I know it's not that bad there. However, you have to get on the front foot with these things. So in the UK, we're recommending that they do connect, and we've had accounting firms today. We've just been starting to talk about this. We've had 100 clients connected with one firm today, and they're using it as this diagnostic tool to say, right, who do I need to
who's at risk
first? Because if they're at risk, my business is at risk, because it's much more expensive replacing a client, and there might not be as many clients to replace them with, and that's kind of the issue that we've got. So anyway, that's why we think, that Predict is the best forecasting software in the world for protecting compliance revenue. We'll send the calculator out. There's a couple of tips and tricks if you did want to have a look at this, particularly if you're in Victoria. And yeah, that's it. We're like 2 minutes over.
Well, there are a couple of questions. So I'm just going to stop sharing for a second because I couldn't see the questions. And I also just want to put out a very, very fast final poll, because Hannah and I are, it's so important. It's so important, I think, with any new products that we help you guys to really understand it. I appreciate that some of the things on screen are quite small. And of course, there's quite a lot of detail in there, particularly things like this number explained. So we are working Australia hours. We are not just going to bed straight after this. We're going to stay online for the next 5 hours or so. So this question, I think you're all going to enjoy. Would you like us to speak to any of us today? Would you like to dig deeper into this? Would you like to challenge us on any of it? Would you like to relate it back to your firm? Could you please answer whether or not you would like to speak to one of us today? Next week, never you are crazy people. One of us said never you're crazy people.
This is Helen's attempt at a joke at this time of night. Yeah.
Everybody is.
You can choose to speak to me instead, because my sense of humor is way better. So
yeah, fine. I mean, I love the person who thinks we're crazy people, but thank you very much. But look, let's just, while that's falling out, let me just have a quick look through the questions. There are quite a lot that has come in. I will collate some of the data that has come in, particularly around clients and the costings. And if I can give a kind of mean across any of them, I will just put that into the email that we'll follow up with. We will include a recording of the session if you do want to share it out with any of your teams. We have been asked about MyOb account rights. I mean, Hannah, you love a question about integration, so I'm going to chuck that one to you.
I do, thanks. So one thing that I do want to say, it's Xero Business Edition, Cashbook and Ledger. We hope that you want to move your businesses over to Business Edition, because they really should have it. There's so much more information. We can't help businesses with such sparse data from Ledger and Cashbook, and also Xero's API doesn't let us. So don't try and sync any Ledger or Cashbook files. MyOb and Account Right and Essentials, they are updating their API at the moment. You've seen all of the endpoints that we need to be able to create this. At the moment, we can't get everything that we need from MyOb, but we're looking at it all the time. So watch this space.
Quick question on cost. Cost depends on your firm, of course it does. But actually, we have a 7-day trial. So actually, just from a lot of what our firms are doing on this side of the world, from that risk assessment perspective, is utilizing that free trial. Get in there and look at it. Look at the data. Look at the accuracy. Look at what it's showing you, and look at potentially the risk areas. That will also enable you to segment, because you've got such large portfolios, and of course you've got 90% that are doing nothing. You're not going to solve all of their problems overnight. So we want to be able to segment it into who we go after first. So the cost will then be indicated by, get that risk assessment in, get them all connected, see who's heading into the red, see who needs lending advice or project work, and then that's where we start with, and then we go from there. I've got a few people that want to go and talk to partners. Great. Again, share this recording. There is also a really short video that I will actually share as well, which I'll include, which you might just want to send to them rather than hope for them to sit right the way through this. Self-training. Hello from New Zealand. Hello. You don't need it. It
You don't
is
need it.
so simple. It has been built
This is
for
plug and play.
plug and
Yeah.
play. It genuinely is the easiest by far and away forecasting tool that you'll see, which is why it's the best forecasting, instant forecasting tool. I'm starting in the world. Yeah. New practice, brilliant. I want to hear more. Great. Those of you that want to hear more, we will reach out to you. I will reach out to you all on email, and I will make sure that our calendars are there to catch up with us, or just email us. Genuinely, any email that comes out to you guys does come from us. So just hit reply, and there is no question that is off limit. And to the person
It's
who
really
thought
simple. Either Helen at or Hannah at.
yeah,
Can't
exactly.
go wrong.
Yeah. And
Okay.
on that note, we have filled our half an hour plus 5 minutes. So thank you very much for staying. All of you have stayed on, which is absolutely, does hopefully.
Sorry, there's one final question that I do want to answer. Sorry, do clients have access to Futurely as well? The way that Xero works, is this specifically for accountants? No, it's not just for accountants. Absolutely not. This is about enabling leveling up these non-advisory clients, giving them a tip, keep them right, showing them how to use it, which you won't need to because the software does it itself. And then every month for 15 minutes on a Zoom call, you check in, you both look at the data together, you hold them accountable for things that they said that they were going to do, and that's it. It's really simple, easy, no reports needed, no dashboards, no PDFs, just human interaction backed up by excellent software. That's the point of it. Okay.
Super. On that note, everybody enjoy your days. Have a good one. Enjoy the sunshine.
Thanks, guys.
Take care.
Bye.
Thank you. Bye.